Welcome back. You're watching Indian Open right here on Bloomberg Quint Live. Good morning, Neeraj. Yesterday's session was interesting because, we actually managed to pull ourselves up higher.
Surprising, isn't it?
Yeah, towards the end of the trading session. And the lows of Tuesday, which was 11,565, that got covered in a big way. So probably now we're looking at the range shifting upwards.
Yeah, I was reading a derivative comment from Angel Broking, which was making that point about how 11,550 or 570 was the level which the March expiry had ended, and it's kind of becoming a sheet anchor of sorts for our markets right now because, as you said, that's precisely the level from which we've managed to bounce back and very strongly.
Yeah, and so far I think in today's expiry, so your series of April, so far excluding today's move, is still in the positive. Not a big amount, but closer to 1% or so, but that could be encouraging if we actually manage a series in the positive territory.
We need earnings to deliver, don't we?
Yeah, so that's what you've got on the index in yesterday's session. A good, strong pullback and maintenance of those gains towards the end of the trading session as well. Let's take a look at what's happening in the futures and options space in the derivative market. Considering today's expiry, Agam Vakil, he's standing by. Agam, I believe rollovers have picked up in line with the last 3 months average.
Yes, they have, Devina. And it was yesterday's day of trade which actually served and aided the rollovers picking up because of the sharp up move that we've seen on the index. As you can see, the Nifty did move up around 1.3% and it's currently standing around 58%, which is well rounded about the previous 3-month average. So certainly there have been positions which are now being taken and being carried over. And it's this case for the Nifty Bank too, where rollovers stand around 56%. Coming down to your India Volatility Index, it has come off to a certain extent, which could be a sigh of relief for those who are long in the markets. Yet it is at pretty high levels at around 23.7. When it comes to change in open interest, because of the fact we saw the Nifty move above that mark of 11,700, we saw unwinding in that particular call. The Nifty put call ratio has also moved up higher to around 1.65 from 1.3. And of course, in terms of some other stocks, we're keeping an eye on Century Textiles. Rollovers at 84%, certainly a very big pickup. Longs coming in even as the stock advances by 2%, followed by Reliance Capital. Of course, this is one of those stocks which moves in and out of the F&O ban. It's moved up as much as 8%, and we saw some longs building in there as well. Rollovers picking up quite substantially. And Ujjivan Financial again seeing longs. So yesterday's day of trade was when we saw a lot of buying into the markets. The question really is, will traders hold their positions, the long positions specifically, or will there be some amount of unwinding as we move into expiry? That's the question that we will get answers to perhaps in the final hour of trade today.
Right, Agam. Thanks very much for that. That's the futures and options update that we have. And I want to quickly just pull up Asia and SGX Nifty if we can, because we didn't take a check earlier on. No major cues coming in there. So Shanghai trades lower by about 0.5%. Nikkei is up 1/3%, and so is the Hang Seng, which is looking slightly weak. For the SGX Nifty, there's no big major cue that's coming in, just an 11-point dip.
Yeah, the other interesting bit would be what happens in late hour of trade today, simply because Tata Steel may not report during market hours, but Maruti will come out post 1:30. Axis Bank likely around those times, if it comes out during market hours around those times. So very interesting. Two very important numbers, sensitive for the space at large, coming out in the second half of trade while the volatility expiry could be there. So
for Maruti, it looks like everyone's pretty much convinced that they're not going to be able to meet. Obviously, we know the volumes have been weak. So I don't know whether or not it'll be a big game changer for the stock.
What if they under deliver from the 12.5? Because Yatin seemed to believe that will be the case. I think that's the fear, maybe.
Yeah, so no one's really even factoring in the possibility
of
a positive surprise from Maruti.
That's true.
The stock actually moved up pretty smartly. The recent few days have not been all that great. But Avinash is here. He can highlight for us whether or not Maruti's recent uptick that we've seen since the start of the month of April is anything to go by in terms of what the street is probably baking in.
I think numbers for Q4 are more or less discounted, but clearly I think the management has reiterated that inventory in the system could possibly ease out in the next 1 or 2 months, I think that is definitely a positive kind of signal. Our sense is that hopefully, if the company does manage to maintain EBITDA margins of 12.5 to 12.6 odd percent, that is not a bad deal considering the fact that top line will be more or less be stagnant, but the hit would be more on the EBITDA side. Our sense is that probably the second quarter of FY20 could see a kind of a continuation of revival of the volume growth. Probably the first quarter, April to June, may yet continue to be a little lackluster, but beyond June, hopefully with the inventory out of the system and demand again coming back, we could see slowly demand inching back to 8 to 9%.
Avinash, we'll talk about some of the other banking numbers as well. Firstly, thank you so much for joining in today. But, I was looking at stocks which have done very well in the last few days, and post-result performance of both DCB Bank and RBL seems to be very heartening. DCB is now trading at fresh life highs for itself. HDFC Bank, a league of its own, but the other two, maybe we've spoken about them earlier as well, but with DCB at fresh life highs, is there merit in going out and buying a banking stock if it delivers good numbers, even if there is a bit of a pop that happens immediately post the numbers? How do you classify the performance of a DCB and RBL bank?
No, I think as far as RBL Bank is concerned, numbers have been extremely strong, but largely I think this good performance has been factored into the market price. And I think what we are seeing is a little bit of profit taking for RBL. Our sense is that DCB has been a bank which has actually reported very good numbers on the asset quality side and obviously on the loan book growth side. Typically, this is one of the smaller banks where markets were trying to get a hint as to whether the growth momentum would continue. I would believe that DCB is definitely poised for further re-rating, considering the fact that it's one of those banks which has already used to trade at a fair discount to the larger banks. So I think clearly just looking at numbers is not what the market is penciling. They are more confident that probably the next 2 to 3 quarters for FY20 could be a lot better in terms of asset quality, loan book growth. And I think Neeraj, as far as RBL Bank is concerned, I think the markets have already factored in a very good FY20 number. So clearly maybe relative to RBL, something like a DCB could also probably do better, considering that private banking is poised to do well.
Nonetheless, HDFC had its initial uptake. I think it was on Tuesday, where the reaction of even a good number, because the market sentiment was so downtrodden, the stock actually closed lower by about 2 odd percent. So the post-result rally didn't really fit in for an HDFC bank.
Yeah, maybe you're right, and let's wait and watch what happens in the near term. But speaking of large numbers or mid-sized numbers, a bunch of stocks that came out with results, a bunch of stocks that will come out with numbers. So let's go across to our research team to try and figure out what the numbers were and what could the possible reaction be based on what analysts or brokerages have said. So Sameet, Darshan, Nikki as well as Shefali join in for all of that. The reviews and then the previews. Sameet, let's start off with you first. Bharti Infratel, what did you make of the numbers? What have brokerages said about the numbers?
Well, it was a weak set of numbers. Now, if you see the headline numbers for Bharti Infratel, the revenue dropped by nearly 1.1%, which is the biggest drop in the last 23 quarters for Bharti Infratel. The revenue number was close to 3,600 crore rupees. The EBITDA came in high at around 1.4% to close to 1,530 crore rupees. Margins came in at close to 42.6%, while the net profit was down by nearly 6.3% to close to 608 crore rupees. Now, in the fourth quarter, if you see on a net basis, close to 1,725 tenancies cancelled, and the tenancy ratio was stable at close to 1.88 times. Now, because of this tenancy cancellation and a stable rental, the revenues of the company were lower compared to last quarter. However, some of these negatives were offset by higher energy margins and higher exit tenancy charges that the company received in the fourth quarter. Now, the exit tenancy charges that the company received was close to 100 crore rupees in the fourth quarter, while due to lower energy costs and higher energy reimbursements, the energy spreads increased to 11%, which was the highest ever energy spread reported by the company in the fourth quarter of financial year 2019. However, in this quarter also, the full impact of tenancy cancellation is yet to come in, because close to 4,300 tenants who have served the exit notices continue to remain on Bharti Infratel's network. So that impact will come in at a later stage. However, something to cheer for the retail investors was the dividend, which was around 7.5 rupees announced by Bharti Infratel, showing a dividend yield of close to 2.5%. Now, post the earnings, CLSA has downgraded the stock to sell from an outperform because of this muted tenancy growth outlook that the company has been seeing for the last few quarters, and that's what the brokerages have made most of it. Most of the brokerages will come out today after the conference call of the company concludes, but as of now, CLSA has downgraded the stock.
And a bad number any which ways.
Yeah, weak weak set of numbers.
So likely that it could react in that fashion. Sameet, thanks for that. Darshan, what about the other earnings? What stood out?
Yeah, so Indiabulls Housing Finance came out with numbers, not the best of numbers from them also. Profit was down, NI was down 1.1%, profit was down almost 7%. The asset quality weakened for the bank, for the financial institution as NPAs began to rise. There was pickup seen in disbursement, but overall, the growth was still weak. On a year-on-year basis, disbursements were down 60% and the loan book dropped 17%. So, but the only important thing you now need to watch out for Indiabulls Housing Finance is the merger, how it goes ahead with Lakshmi Vilas Bank, and if they get a banking license. So that would be the big trigger for them. M&M Financial, yes, probably will react positively. Strong set of numbers, did well in yesterday's trade also. NI up 27%, profit up 90%. Asset quality improved and that led to the earnings beat that came in. The disbursement, however, points to a slowdown and there is a little bit of cautious stance, but the management is confident of delivering meaningful higher growth. ICICI Prudential Life Insurance also, the VNB growth lagged due to weak premium growth and flattish margins. The premium growth was up 11%, persistency ratio at 86%. The management indicated an aspiration to double the VNB book in the next 3 to 4 years. Syngene, good set of numbers, revenues up 30%, profit up 18%. Discovery Sciences, Development Services, all of them did well in trade. Shriram City Union Finance, even though the NI was up 10% and profit up 11 times, that was because of a base effect last time. The numbers still coming in below what the street was anticipating, and that was led mainly on account of higher provisioning. And finally, Agrotech Food, weak set of numbers, revenues down 7%, EBITDA down 6%. The only reason that the profit was up 11% was higher other income.
Okay, thanks a lot for that, Darshan. We'll watch out for some of those numbers as well. Let's talk about companies that will come out with numbers today. Nikki, what's anticipated from Tata Steel?
Not good set of numbers. Top line 21% growth there, but then in terms of the operational performance, we aren't expecting good set of numbers. We're just expecting a 4% uptick. They're nearly flat growth. 6,739 crore is the number that we're working with. Margins are expected to contract to 15.4% as compared to 18% in the corresponding quarter, and the profitability of the company is expected to be around 2,190 odd crore. In terms of the parameters that we like to watch out for, the company has already delivered its volume figures and we've got the numbers. It's a 25% uptick there to a number of around 7.8 MT. Realization, however, expected to be down by 3%. EBITDA per ton too is expected to be down by 18%, and the number that we'll be looking out for would be 8,600 per ton. Weaker spreads along with the lower scale is expected to weigh on the operational performance of the company. The margins are expected to be weighed down by the poor performance coming in from the European as well as Southeast Asian business. Now remember, Bhushan Steel has already reported the numbers, and EBITDA per ton for that company also came down by 16%. In terms of the standalone business too, we're expecting a contraction of 16% on account of lower spreads. So clearly we're not expecting good set of numbers from Tata Steel. What we'd like to watch out for, apart from the EBITDA per ton, we would be watching out for the outlook on global iron ore prices and the commentary coming in on the steel prices thereon.
Okay, we'll watch out for these as well. And yet another banking name, Shefali, a very important one.
Absolutely. In fact, the street has been very gung-ho about Axis Bank and ICICI Bank, so we look forward to that, whether the bank actually manages to deliver this time around, and the hopes are high. So we are expecting net interest income figure of about 5816 crore rupees. That will be a growth of about 23% on a YOY basis. In profit is seen at about 1630 crore rupees. That will be a turnaround from what they did in the same quarter last year, where they had a loss of about 2190 crore rupees. Factors that we'll be looking forward to: a loan growth of about 16% and deposit growth of about 20%. In fact, the management has been telling the analysts that they're looking forward to capture the lost opportunity that they had in the deposits. So that will be important to look forward to. Margins are seen largely stable at around 3.5%, and we'll be looking forward to the amount of slippages that they do. So this time the expectations is that the asset quality will be much better. We are factoring in slippages figure of about 2400 to 3000 crore rupees. So that will be against 4337 crore rupees in Q3. So improvement from there, and a substantial improvement on a YOY basis where they had almost 9000 crore rupees of slippages. So that will be one positive factor to look forward to. Fee income is seen largely stable. We are factoring in a number of about 2750 crore rupees versus about 2450 odd crore rupees. Other than that, with the new management coming in, something that the street has been keeping an eye on, the foray into insurance insurance or any sort of steps that the management takes towards that direction. In fact, a couple of days back, there were news reports that they might consider picking up stake in Max Life Insurance. So any commentary around that front will be important to look forward to.
Okay, we'll watch out for all of these. Thanks so much for joining in, all of you, and giving us those updates. Avinash, a couple of important names out there. By the way, the news flashing on your screen are also important. Maruti Suzuki, they have hiked prices of one of the variants, but keep that at the back of your mind. But Avinash, since we are talking about the results, Bharti Infratel sub-estimate numbers, we got one brokerage saying that the numbers were bad and downgraded the price, etc. What do you think could happen to the stock today?
No, I think Neeraj, the stock should open weak, considering the fact that these numbers have been quite disappointing, and I think the first quarter of FY20 could possibly see the effect of further exits from most of the tenancy clients. Our sense is that this stock could possibly witness a little amount of pressure ahead of these numbers, considering the fact that most of the tenancy agreements are now cancelled, and I think first quarter of FY20 could see a little letdown, on the top line growth as well as on the EBITDA front. Our sense is that possibly this could get factored into the stock, much before the Q1 numbers for FY20 are announced. But the Q4 numbers are definitely not great. I think there is definitely disappointment both on the top line growth as well as on the margin front.
All right, that is a quick call coming in. There are a few stocks. We'll talk about more fundamentals in just a few moments, but also try and get in a technical perspective. Our technical experts are joining in right now. We're joined by Aditya Agarwala, technical research analyst at Yes Securities. Shortly, we'll also be joined by Sameet, Chavan. Aditya, let's start off with the index first. Yesterday was a really smart pullback that showed that there was some strength and conviction in the market, resilience towards the end of the trading session to hold beyond Tuesday's lows in a big way. Does that move the range a little higher, and does it give you confidence to take a long position?
One thing to look out for was the volume. Volume were really good in the pullback that we'd seen in late trade yesterday, and it was backed by banks, especially the financials led the pullback in the markets in the late trade. Having said that, 11,750 on the upside continues to be a minor resistance as far as the Nifty 50 is concerned. If it manages to cross that hurdle of 11,750, then probably we can see an extended pullback rally in the markets that we had seen in trade yesterday. In that case, markets can head higher to levels of 11,820. On the downside, 11,670 to about 11,600 is a strong support zone. Looking at the options data, probably 11,700 is where the maximum put open interest is there right now. So I believe 11,700 for the day can act as a support on the downside. And if an index starts to trade above 11,750, then definitely there's a long trade in the making as far as the Nifty 50 is concerned.
Okay. Good support from the Bank Nifty as well?
Yes, definitely. Bank Nifty financials were the one which led the rally in trade yesterday. On the upside, 30,000 is an immediate resistance for Bank Nifty. If that is taken out in trade today, one can take a fresh long probably in Bank Nifty as well for targets of 30,150. On the downside, 29,750 acts as a good strong support as far as the Bank Nifty is concerned.
Okay, let's talk about individual stocks then. What are you going to be recommending? Today's expiry, so it's going to be extremely volatile.
Yes, definitely. It's going to be a volatile trading session, and if anything, yesterday's moves suggest that there will be volatility in the markets for sure. So I picked up Z Entertainment. Stock has corrected significantly in the recent times, and yesterday it showed good strength. Volumes were healthy in trade. Yesterday stock was up 2%. One can take a fresh long even at current levels of 418 for targets of 450, putting a stop at 400. The second long trade is a Mahindra Finance. That too gave a smart move in trade yesterday. It's broken out from a consolidation. At so current levels of 433, fresh longs can be taken for targets of 455, putting a stop at 421.
Okay. Yesterday's session saw a slight bit of a bleed coming in on Tata Motors after the swell run that we've seen the stock have from its lows of about 150. Stock's now at about 223. So, I mean, in terms of what it does, JLR market share in China has been coming off. Expectations are that the truck market within India itself is going to face some challenges in the near term, which could weigh down on Tata Motors in any case. And the passenger vehicle business is nonetheless challenging for the entire industry. So how does one probably look at Tata Motors if they have it in the portfolio, or probably if they're looking to get it in their portfolio, Avinash?
I think in the near term, the way the stock has gone up from 130 odd levels to roughly 225, 230, we could see a little bit of consolidation. And I think overall, our sense is that the quarter 4 could be definitely sequentially quite better than quarter 3. Quarter 3 had a very large exceptional loss. So Q4, despite the fact that may not be loss making, would definitely be better operationally. Our sense is that FY20 Devina could be a lot better, considering that the JLR market possibly is improving and we are seeing some positive kind of green shoots in China. Our sense is that FY20 could be a lot better. The market would obviously expect some sort of positive management commentary and some sort of estimates on how the global markets, especially Europe and China, pan out, because that is going to be the key triggers. The domestic market continues to be quite challenging. So I think the stock may just remain range bound. But yes, I think somebody looking for a longer term kind of perspective could possibly look at some further declines to actually accumulate here.
Well, okay, so let's see what happens here too. We were talking to Aditya about the charts. Let's get in Sameet Chavan, Chief Technical and Derivatives Analyst at Angel Broking. Expiry day, a good time to have him. Sameet, good having you. Thanks much for joining in. I was reading a note from Angel Broking yesterday which suggested it might be a good idea to buy or load up some nifty calls because there is an outside chance that we may head higher. Is that the base case? What's your recommendation for an index strategy today?
Yes, Neeraj. See, 11,549 has been acting as a sheet anchor of late, and looking at yesterday's recovery, this support level has proved its significance. So it has become a sacrosanct level in the near term. And till 2 o'clock yesterday, we saw massive writing in the 11,700 call option. And the kind of gust, the velocity at which market recovered in last 90 minutes of trade. Those 11,700 call writers had to cover up their positions, and in fact put writers at 11,700 became quite active, and in fact we saw massive writing in 11,700 put option. So it suggests that today's expiry is likely to pan out beyond 11,700. In fact, the kind of momentum we saw in most of the heavyweight counters, we believe that it might pan out beyond 11,750 as well. So in our sense, we would rather take a punt at 11,700 call, which has closed around 42. But the kind of sluggish start SGX Nifty is indicating. So if we see any kind of 20-30 point decline in Nifty in initial trades, so if we get that 11,700 call somewhere around 28.30, that makes a good risk to reward ratio, then the entire premium becomes your stop loss level, and we would expect Nifty first heading towards 11,780, 790. So our target for this 11,700 call option in that case would be around 75-80 rupees.
Okay. What about specific stocks?
See, DCB Bank, this has been clearly outperforming its peer counters. We have been seeing sturdy structure, series of high top, higher bottom formation. And yesterday, we saw this stock surpassing its major resistance of 210 on a closing basis. So we expect continuation of this move. DCB can head toward 224, go along with a stop loss of 206.8. Apart from this, LIC, which has been underperforming of late, it has already corrected quite a lot. But if you look at it from a slightly broader view, weekly, monthly chart still looks good. We have already seen, trend reversal on weekly chart 3 weeks back. So it appears that this entire decline is a retracement of the previous up move. 490, 495 seems to be a cluster of supports, and yesterday we saw narrow range candle on daily chart. So it suggests that from here on, the stock would find support around 490 and it would give a decent bounce back. So our initial target would be around 518, go along with the stop loss of 488.
Okay, watch out for these stocks as well from both our experts. Time now to get in our special segment Bloomberg Edge, wherein Yash Upadhyay tells us about a pattern that the Bloomberg terminal has thrown up on a stock. Yash, what's the stock on your radar today?
Well, morning, Neeraj. So we're tracking Amara Raja batteries on the charts, and it's a big day for most of the auto ancillary names as well. But for Amara Raja, we could see some amount of pressure building in today's day of trade, as the MACD indicator suggests a negative signal for the counter. As we do, let's first try and understand what's the MACD indicator and how do you interpret it. It is a trend following momentum indicator, and what it does, how do you interpret it? You basically go long when the MACD line crosses above the signal line, and you go short when it crosses below the signal line. In the case of Amara Raja Batteries, now we've seen that the stock has been in a long downward trend. It's gone from the levels of 1,050 over the last 1 year to now as low as 675. In fact, this is the mark of 700 is where it has a crucial bottom. It came falling from the levels of 1,050 to as low as 700, but then it again managed to scale up from there, and it has been trading in a narrow range of 700 to 900 rupees, with 700 being a key support zone. But again, it has managed to break below that mark, and over the last 3 trading sessions in this week itself, we've seen significant amount of weakness, and it has crashed below that mark. The MACD line, as you could see in the lower panel, the blue line, that too has given a negative crossover, which indicates that there could be significant amount of weakness, as you could see. We are looking specifically at the weekly chart over here, and after 2 straight weeks of gains, we are seeing a big red candle or a big move on the downside this time around as well. And on the fundamental side as well, Neeraj, 4 out of the last 5 target price revisions have been on the downside in the last 1 month for Amara Raja Batteries. So expect further weakness in the counter.
Okay. Yash, I know you briefly alluded to that, but just for the benefit of our viewers, how well does this work for Amara Raja in the past?
Well, it's worked very well, in fact, Neeraj, because the downside over the next 1 month is about close to 4.88% for the counter, with the success being between 3 out of the last 6 times it working successfully.
Okay, we'll watch out for this one as well. Yash, thanks so much for putting that into perspective. As Yash said, it's an important day for autos and auto ancillaries as well, so do watch out for some of these names. It was a big day in trade yesterday for cement. Sameet, Chavan, I want to come back to you on Ultratech Cement, and then of course get in Avinash's view here as well. But sharp uptick yesterday in the dying moments of trade, or rather in the last 1.5 hours of trade. There are brokerage upgrades that have come in. So maybe fundamentally there is a case, and Avinash will tell on that. But would you believe that if you initiated a long yesterday, because the SGX is suggesting a sluggish start, if the stock were to start slightly soft, would you hold on, or would you recommend holding on to the long position in Ultratech?
In fact, Neeraj, as a disclosure, we have recommended this stock to our clients on 8th of April around 42.10. So our medium-term call for this particular color counter is still active, and our target was somewhere around 4600. So we still hold that view, and yesterday's massive bump up clearly proves significance to that particular analysis. Now, looking at the overall structure, 4100 has become a strong base now. So any minor dip, probably 40-50 points dip towards 43.50, 43.40 would be a good buying opportunity in case of a momentum traders. Initially, we don't expect this stock now to slip below 4300, 42.80. So one can go long, momentum trader can go long on a dip towards 43.50. Immediate target to watch out for would be around 4500, and one can keep a stop loss around 42.80.
What about fundamentally Ultratech Cement? A big rally already yesterday, the results baked in?
I think the markets are happy to know that FY20, the management was quite upbeat that capacity utilization could be very stronger, and prices could continue to remain quite strong. In fact, in this quarter, the operational beat was very strong, a very strong EBITDA growth. And most importantly, although these numbers are not directly comparable, I think the markets are definitely factoring in the fact that increased volume growth plus a decent amount of pricing gain could possibly continue in FY20. So I think clearly you could see this rally continuing for some more time. And I think hopefully if cement prices remain even at the current odd levels, you could see a higher EBITDA per ton and obviously better operating profitability.
Indiabulls Housing Finance, how did you read into that?
I think numbers were definitely, in line with expectations. I think my sense is disbursements going down by almost 60-odd%. Devina is definitely not a good sign, despite the fact that they do have a decent amount of liquidity to fund their debt requirements. Our sense is that, now the markets are factoring in the fact that how would this merger with, the proposed Lakshmi Vilas Bank go through, because clearly this is the near-term trigger for the stock. I would believe that, at least for the next 1 or 2 quarters, the core housing finance business could possibly be under pressure, and the markets would be clearly watching on this development. I would believe that it could at best be a market performer, and unless numbers improve on the operational front, especially for the housing finance segment, I would not be surprised this stock may remain possibly in a range, or maybe react little negatively till the time we see some clarity on the core operating housing finance business.
The other interesting one is Jet Airways, of course. Rather, Yes Bank, of course. Sorry, I'm just jumbled up with the names. Yes Bank, simply because one of the papers, I think Mint is carrying an article about how Ravneet Gill plans to change the entire top deck at Yes Bank. If that were to happen, one would presume that the transition time and the focus back on return ratios moving up higher would be slightly delayed, and that might not be viewed well by the street. So this is an interesting one. I came on Yes Bank simply because that kind of ties in with how the movement in Indiabulls Housing Finance has been the last few days. They've kind of played two to tango, almost in the same vein. So let's wait and watch what happens to Yes Bank in the session today. Could be an interesting mover. The one which has done remarkably well, Avinash, I don't know if you track it or no, is Fine Organics. A new kid on the block, about 6 months, 7 months, but yesterday hit fresh life highs for itself. Do you track this company?
In fact, they are into specialty chemicals, especially which go in the FMCG and the pharmaceutical space. And since they have a fair amount of, pricing premium, I would believe that, obviously they should do well, considering the fact that, the IPO money was clearly meant for financing one of their expansions, as well as, divestment for the promoters. In fact, this is a niche play near, so obviously markets would be looking at what kind of earnings growth, the company could deliver, in FY20. But typically, these are companies which have got, large amount of FMCG and pharma clients, and where, the stickiness in the business is very solid. So I would believe that, yes, somebody is looking at a fairly long-term kind of exposure could obviously look at this stock. But yes, I think we need to have at least 1 or 2 more quarters of earnings visibility, since this is a recent kind of, IPO listing.
Okay, that's Fine Organics, though, last 6 months, 33% higher. The other one, that we probably could take a look at is what happens to the telecom space now. Bharti Infratel reported its numbers. Vodafone Idea rights issue has been oversubscribed, so that overhang is out of the way. We're going to watch out for how Bharti Airtel does with regards to its own fundraising. How would you position yourself?
No, I think from a near-term perspective, I think both the counters, Vodafone as well as Bharti, could possibly see, some sort of accumulation, considering that both these stocks have been beaten down. But I think, looking at the kind of equity dilution, Devina, over the next, say, 12 to 18 months, I would believe that, clearly in terms of earnings growth, I would not be surprised that it would be a challenge to actually service these sort of, massive equity dilutions. So I think clearly from a business perspective, you could see ARPUs improving, some amount of debt actually getting reduced because of the equity infusion. So near term, I think definitely the stocks could do well. But in terms of numbers, Devina, I think in terms of the earnings growth, which is very crucial, it could still take a long time before these stocks could get a significant amount of re-rating.
Okay, 30 seconds left to go for market pre-open. So we're going to pause this discussion for a few moments and take a check on the markets. The Asian pack is looking fairly more mixed bag. No major change from the last time we took a check. Sans the fact that Hang Seng has come into the green, but that too by a marginal bit. So no real big moves there. Shanghai is still in the red by about 0.5%. For the SGX Nifty, not budged. Just about 6.5 odd points under. 11,730 is where the SGX is trading at. The currency is going to be an important watch, because you could actually see a breach of 70 if it does open weaker. Nifty 50 on your screen down about 1/3%, about 0.5% down for the Sensex. Yesterday's big moves that came about in the likes of an Ultratech Cement was the dying moments of trade on the back of a good set of numbers. Whether that carries on or no, we will be watching. That's about 1% higher again on an Ultratech, 4,432. Indiabulls Housing, though, has moved up as well, 1.5%. Remember, they have, over the last few months, been slamming the brakes in order to conserve cash, but it's going to be an important watch to see how the Lakshmi Vilas Bank deal emerges. GAIL, M&M, Yes Bank, all of them trading positive. HCL Tech, Maruti ahead of numbers, should pull that up as well to see how pre-open has been. Bharti Infratel, a big cut coming there, but this is obviously slightly volatile and an unnatural 10% dip that we're seeing on Bharti Infratel. That will come back. It was a disappointing quarter nonetheless, but that 9% cut is quite steep. TCS is down 1%. Tata Steel, Sun Pharma, Infosys trading under by about 0.5% to about 1%. And we've breached 70 on the currency. So you're going to see an impact of that on some of your currency-sensitive spaces, be it the likes of oil and gas as well as IT or for that matter, pharma, all of these pockets will be closely watched out for. On the bond market yields, yesterday's session opened up closer to 7.47. That seems to have come off. 7.42 is what we've got in terms of the bond market yields.
Okay, what about the broader end of the spectrum? Mahindra and Mahindra Financial Services and ICICI Prudential Life. Both of these names should come up. Let's see if they are reacting. M&M Financial, optically, the numbers seem good. Operational numbers seemed okay, 3.5% uptick. What about ICICI Pru? That stock flattish. Like we said, the expectation on the reaction was not going to be the same as it happened the last quarter, because the numbers were not so variant as they came about the last quarter. So interesting moves there. We already spoken about Bharti Infratel. We'll talk about some of the other stocks in a bit. Just want to mark a couple of movers if they are. McLeod Russell about a couple of percentage points lower, so 3% lower for McLeod Russell. And Syngene is likely reacting to its numbers, so 3.25% higher for that one. So that seems to be doing okay for itself too. So 2 or 3 names that stand out in the session today. Let's wait and watch what happens during the course of the day. Jet Airways, let's pull up that one and see how is that one behaving. 169 all over the place. Must be a difficult time to trade into a Jet Airways the last few days, you have to say. Aditya, between the aviation names, anything that stands out as a trade?
Clearly, Jet Airways is an avoid. I wouldn't want to get into a trade into Jet Airways. If one wants to take a trade, one can look at Indigo. That's the only one which has been doing good, trading at an all-time highs. But that too has come off in this week itself. Profit booking has been seen. So close to about 1350 to about 1370 is a good accumulation zone, not at current levels. I would want the stock to test levels of sub 1400. That could be a good accumulation zone, and the stock can test 1600 again on the upside. With a decent stop somewhere around 1350 to about 1300.
Okay, got that. A few other names I just want to take a look at within the broader market space. While obviously this is pre-open, so the prices will keep changing. But, coming on an Edelweiss, Avinash, we're going to watch out closely, because it seems like, and there has been, market conversations regarding liquidity being very tight for a company like Edelweiss. So the management has, been coming out and speaking about how they're comfortable with the liquidity.
No, I think clearly, Devina, there could be a little bit of challenge in terms of liquidity, at least maybe for the fourth and the first quarter of FY20. But I think looking at the kind of markets they are present on the wholesale market side, on the retail side, plus on the capital market side, I think they are well diversified. So to that extent, the impact of liquidity primarily won't be significantly large on one segment. So I would believe that yes, maybe the wholesale market business could possibly see a little bit of slowdown in the near term. But overall, I think FY20 should be a lot better. I think the markets are probably a little more concerned on the liquidity angle, but I think they have been making noises on the fact that other businesses could unlock value for them, and that could possibly provide them some sort of liquidity, funding, at least in the near term.
Sameet, would you be a trader in any of these names? Edelweiss, even the other brokerage names like an IIFL, would there be a trade here?
I'm sorry, I'll not be able to comment on these names.
Okay. From the housing finance space, while we've spoken about Indiabulls Housing Finance, Diwan Housing Finance, Canfin Homes, Repco Home, up until a few weeks ago, it was pretty clear that there was a slight bit of a differentiation in terms of the way the stocks within the same space move. So Repco Home, Canfin Homes did slightly better than the likes of Diwan Housing Finance. But do you see a trade here? Sameet?
See, within the housing finance name, I have already recommended LIC. It is there in my recommendation list. Apart from this, Repco, which has been consolidating of late, so I would rather wait for some kind of follow-up move. Follow-up moves beyond 450, 455, because there's a cluster of resistance in the zone of 440, 445, 450. The 200-day moving average also, converge around this important resistance area. So I would rather wait for a breakout to happen, a sustainable breakout beyond 450. If that happens, then yes, we could see a good move toward 480, 485. But as of now, I'm expecting this consolidation to continue.
Aditya, real estate as a pocket. We saw Indiabulls real estate. Results were not good, but the stock did what it did on the back of the news of Godrej Properties, looking to pick up a part in Indiabulls real estate. But the others, an Oberoi, DB Realty, Godrej Properties itself, from its highs of about 965, 970, has started to come off, and I think is trading sub 900 now.
There is profit booking in Godrej Properties, but that stands out. It is the best pick within the real estate space. So I'll stick my neck out with Godrej Properties. There can be a trading pop as far as Indiabulls real estate is concerned. There's good volume action there. But if one wants to make an investment into real estate, Godrej Properties has to be the pick. Even at current levels, one can start nibbling into Godrej Properties and continue to accumulate till levels of 860 on the downside. Stock can easily test higher levels of 1050 to about 1080 on the upside. As far as Indiabulls real estate is concerned, there's a trading pop there. Definitely, stock can test levels of 135 on the upside. One can put a stop somewhere around 110 to about 108 on the downside.
Avinash, did you get a chance to look at the numbers of Syngene? The stock seems to be reacting mildly positively to its numbers.
No, I think numbers have been pretty good. My sense is I think the markets were also rewarded with a very liberal bonus. Our sense is that, I think clearly in terms of their parentage Biocon, I think the business definitely should do well. I think they are one of the niche players in the research segment. And our sense is that typically somebody takes a long-term view, Neeraj. These are not companies which could be looked upon on a quarter-to-quarter kind of performance. But from a long-term business angle, I think definitely if Biocon does well, and their research, obviously molecule work is going on, so I think this could be a good bet from a longer term kind of perspective. So numbers definitely are definitely good, and I think the stock should react positively today.
Hexaware is the other one that reported numbers, and Macquarie has maintained its outperform on the counter. In fact, it's hiked its target price to 460 from 440, saying that they had a decent start to calendar 19 despite seasonal factors. Avinash, mid-tier IT now is going to take center stage. What's your sense?
No, I think there could be selective pockets, especially in mid-tier IT companies. But I think clearly the bigger ones could possibly continue to show a stronger growth momentum. I think we would like to be invested in companies like say a Tech Mahindra or maybe even a larger player like HCL Tech. I think valuations look pretty attractive, and I think looking at the way the currency is behaving, I think clearly the frontline companies could benefit a lot. And I think we are going to see definitely companies operating in the 5G as well as in the telecom vertical space could possibly see a much stronger kind of positive headwind in the coming financial year.
Sameet Chauhan, Hexaware, Emphasis, Mindtree, anything that you will trade in?
No, I think all those stocks are clearly into a consolidation mode. So as of now, I don't see any encouragement. And if you look at the overall volume activity, it has dried down completely. So there's no participation as such. So in case of Hexaware, I would be closely keeping a track of this important resistance of 360, 365. So there's a band of 360, 365 on the higher side and lower side 320, 322. So a decisive breakout in either direction would deter the near-term direction. So I would rather wait for any kind of breakout to happen.
Okay. Minutes away from market open, let's tell our viewers all that they need to know to stay ahead in trade today. First up, earnings. Bharti Infratel reported a surprise drop in profits after the exit of Vodafone Idea as tenants. Revenues declined the most in nearly 6 years.
Slowdown in auto demand is likely to weigh in on Maruti Suzuki's fourth quarter performance. The company may report a flat to weak earnings.
But Axis Bank may continue on the profitable path under the new management. The lender will report numbers post market hours today.
Vodafone Idea rights issue gets oversubscribed. The issue worth 25,000 crore rupees received demand of nearly 27,000 crore rupees.
RBI asked banks to disclose exposure to IL&FS accounts separately. The move comes after INCLAT had asked banks not to tag IL&FS loans as NPAs without its permission.
Lastly, Ipca Labs is set to acquire 100% stake in Ramdev Chemical for about 108.5 crore rupees.
This is interesting. Again, an API company in which there has been a stake bought for a valuation which is fairly steep, and we've been speaking about how API companies by and large have been really ramping it up. I mean, Divi's Lab, for example, or some of the others too, Salora, and all of them have done remarkably well. So this is an interesting foray by Ipca Labs, or interesting acquisition by Ipca Labs at a valuation which was pretty decent too. Avinash, any thoughts here? The API companies particularly?
No, I think, Neeraj, most of the API companies should do well, considering that there have been genuine supply, constraints in, other markets like China, and I think that is probably one of the reasons we have seen profitability of most of the API players, improving significantly. I think to name a few, we have seen players like Salora, or for that reason, IOL Chemicals. Clearly these are companies where the EBITDA margin has expanded purely out of operating leverage and, better, remunerative market prices. So I think this, phase is going to at least continue for the next 3 to 4 quarters. So I think in that scenario, possibly, you could find in the near term, most of the API companies probably putting up better Q4 and, better numbers at least in FY20 also.
Let's wait and watch what happens there. Ipca has not quite shown a reaction. Actually, very few stocks showing a very big reaction, save for Bharti Infratel, which is down about 4.5%. So that is reacting big time to its numbers. Indiabulls Housing, you could argue, is reacting as well, about a couple of percentage points lower. Bharti Infratel for sure, 287 and counting. Sameet, is it too late to short? Because it will start off only 4.5% lower.
Yes, Neeraj, it looks like... see, overall, if you see, this stock has been clearly struggling around its major resistance of 338, 340, and today with 4 and 4.5% gap down opening, it would be closer to somewhere around its important support level of 310, 308. So it would be very important for this particular stock to sustain beyond 308, 309. In case if it slides below 308, and if you see this stock sustaining below that level, then yes, we could see this sharp move on the downward direction getting accelerated probably towards 300, 298. So as of now, 308, 310 would be a strong support zone according to me.
Okay, a minute and a half left. Avinash, if I can ask you to squeeze in a quick question here. Out of the results that have come out thus far, anything that has stood out for you which will make you go out and buy the company or sell the company?
No, I think yesterday numbers...
last few days, I mean. Huh?
No, I think yesterday, I think M&M Finance has shown a very strong number on the disbursement and on the asset quality side. And the management commentary has also been very solid. I would believe that, Neeraj, if at all, we get a chance to, buy the stock at any correction, I think this could be a good opportunity. I think FY20 should be a very strong year for the company. So I think this is one of those NBFCs which is largely rural focused, and where I would believe, asset quality stress is now slowly improving. So this could be an interesting bet.
All right. You also had the Deepak Nitride, which you were recommending a while ago. Is that still something that you're going to be holding on to?
Yeah, I think, Devina, we are looking at a very strong number in FY20. I think fourth quarter could see numbers presented on a consolidated basis, but I think overall they are into a niche space, phenol and acetone, and I think these products are going to actually give a fair amount of re-rating for the year FY20.
Okay. Top calls. Aditya, let's start off with you.
I will go in for Hdfc Limited. Stock has bounced back in trade yesterday, backed by very good volumes. So even at current levels of 1980, probably one can take a look at taking a fresh long in the stock for targets of 2040 to about 2060. Put a stop somewhere around 1940 to about 1930.
Sameet, quickly.
I would continue with DCB trading at its all-time high, and yesterday was a decisive breakout. So my target remains at 224, stop loss at 206.8.
Strong results, and it's showing in the stock. Gentlemen, stay on. We'll just take in opening thoughts from you post-market open. But here's how we're starting off this Thursday morning, starting in the green and well, marginally in the green. But you would have to admit that the start will be flat because the handover was such. We were not expecting any fireworks, and we're not getting any. So no surprises whatsoever, either positive or negative. I reckon the mid caps and the small caps too would be in the same league. Yeah, very, very flattish start, about 24 points for the small cap space, 36 points for the mid cap space. So no, not too many moving parts on open at least. Maybe specific stocks would be. Bharti Infratel certainly would be. So let's start off with that. Not as bad though, I must say. 2.5%. The pre-open rates were showing a 4.5% downtick. For now, 2.5%. Indiabulls Housing about 1.5%. But that aside, maybe a Bharti Airtel a little bit, Maruti a little bit, but nothing too dramatic. Kind of even Stevens on the market breadth as well. And on the gaining side, Ultratech starts off from where it left off yesterday, another 1.5% higher. Yes, Bank marginally higher, interestingly. And IT, at least led by Tech Mahindra and HCL Tech, seems to be starting off on a decent note. Nothing too dramatic, but starts off on a decent note. But almost even Stevens on the breadth. Bharti Infra arguably the standout performer. You could even argue that Ultratech, because of what's done in the results, is doing well. This was to be anticipated. Brokerages have upped the target price. Select brokerages have upped the target price on Ultratech after the delivery yesterday. Very quickly, a couple of pockets, a couple of stocks that I thought were interesting results and might be reacting. So just bring them up and bring stocks near life highs. So DCB Bank, Sameet, Chavan spoke about it. A breakout move yesterday and near life highs. Starts off marginally positive. Fine Organics, not so. What about stocks which came out with good results? Just a couple that I want to highlight. ICICI Pru, an earnings impact, couple of percentage points higher. The management will talk to us at 9:30. Very strong return to APE growth is what they said. Maybe that's what's showing in the stock. And Syngene, Avinash spoke about how the positive reaction should be on the stock post results. It's starting off marginally positively. Devina, what are you spotting?
Well, we start off first with what's happening with regards to Jet Airways. The stock's down about 3.5%. Vodafone Idea post the rights issue getting oversubscribed. That's still open in the negative, 2.5% under. You've got Indoco Remedies, which is down 2.5%. Indiabulls Real Estate, after yesterday's Big Bang open and Big Bang move on the upside, is trading under in today's session, and so is following suit with what Indiabulls Housing is doing. From the oil and gas pack, should pull up in HPCL. We've already seen what BPCL and IOC are doing, but in HPCL, Oil India, yesterday's session was not bad. You saw all of these stocks recover. In today's session, slightly more muted and slightly more subdued. You've got Rain Industries, Adani Ports, Canara Bank, Tata Global Beverages is down about 0.5%. Edelweiss continues to reel under pressure, and that is looking weak. Gen Irrigation too, as I said, has been slightly weak. Amongst the gainers, you've got the likes of a PC Jewelers. You know, this stock is difficult to gauge because you've got days on a trot where the stock's moved up in double digits, and then you've seen steep, heavy sell-offs coming in. Today's session, though, was up about 2.5%. Zealand is up 2.25%. ICICI Pru is up 2%. Syngene is up 2%. Sterlite Tech, which was down in yesterday's session, also recovers 1.7%. So that's what you've got in terms of market open. Market breadth is positive, but there's not much of a difference. About 600 stocks advancing, 450 stocks are trading in the red. Let's get into some opening thoughts then. Start off with you, Aditya, at market open, and obviously approaching expiry towards the end of trade today.
So I'll closely watch out for 750 level on the index, 11,750. Until that is taken out, I'm not taking any fresh longs. Above 11,750, fresh long is in the offing for targets of 11,800, 820. Below that, till the time it crosses 750, probably index can slide slightly lower towards 11,700. That is where the immediate support is. If that is broken on the downside, then there can be a fresh leg of selling. Until unless this band is there, 11,750 to about 700, I'm not trading that band.
Sameet, what about you?
See, I had talked about 11,700 call, buying range was around 28.30. It has now come in that range. So it makes a sense, going long in this particular. So we would take a punt going long in 11,700 call. 28.30 rupees is my risk, and I would expect this, strike to give a decent appreciation. 75.80 would be my target.
Okay. Sameet, Chavan, Aditya, leave it at that. Thanks so much for taking the time out and being with us and giving us that perspective. Avinash, just one very quick thought. We spoke about Bharti Infratel pre-markets. It started off 3% lower. Quick thoughts here.
I think I would still reiterate, Neeraj, that it's better to move out of this stock, considering that the first quarter of FY20 could be even much worse than the fourth quarter of FY19. And I think looking at the way tenancy cancellations have happened, we could possibly see further earnings downgrades happening in FY20.
Avinash, appreciate you taking the time out, really do. Thank you so much for joining in today. And that's Avinash Gorakshakar with his thoughts. Syngene was to his mind, and Mahindra Financial to his mind was the standout result in the quarter, in the numbers that have come out thus far. Let's get in of important fundamental voice. Mihir, Vora, Director and Chief Investment Officer at Max Life Insurance, joins us right now on the show. Mihir, good having you. Thanks so much for joining in. So far, so good this earnings season, or would you believe the climax begins to start now with the banks starting to chip in earnings, Axis beginning today?
Good morning. Yeah, so far so good, but we must realize that typically it's the good quality companies which declare the results first. And we have seen first set of numbers coming in from the tech companies and as a few of the good quality banks, etc. So good start, but we need to see going forward.
understandably so. How do you gauge what's happening around us in the world and the impact that it could have on India? I know the bigger trigger is the elections, and we'll come to that in a bit. But crude staying at elevated levels. At the same time, China and US seemingly moving very, very close to some definitive agreement on the trade war as well.
So I don't think the market's factoring in any big disruption from US-China relations, given the positive slate of numbers that have come in from the US companies in this season. The US markets are almost at an all-time high. So to that extent, the US sentiment seems to be okay, and they don't seem to be too concerned about the US-China issue. Oil, however, is an issue for India, and that's something that's not gone in our way for the last few weeks.
And neither has the currency, Mihir. We're now back up above 70. Do you see this, if clubbing of most of those factors, be it currency, be it oil, be it growth slowdown, overall global growth slowdown. We're going to be watching out for the US GDP numbers come tomorrow, so that's going to be an interesting data point to keep an eye out on. That obviously will impact volatility in the near term, but will it change the overall outlook?
So broadly, if you look at the global outlook, it's not as good as 2018, which was a good year, but still not too bad. So it's kind of a mixed view, where we are saying that the global economy probably will grow at about 3% or a little above that, which is lower than the 3.5% or that we saw last year, but still not too bad. So that's the base case that we and the entire, the consensus seems to be working on. And within that, of course, we need to see how India performs. But as long as the global backdrop remains of a 3+% growth, it's not too bad from the macro point of view for India.
Okay. Mihir, I just want to take the conversation back to the earnings picture. I understand that it's now wait and watch and try and figure out what some of the others do. What would be, to your mind, the key monitorable? At the beginning of the earnings season, it was all about what the corporate-facing banks would do, which would lead the quarter to optically or otherwise show a big number. Is that the key monitorable, or between the time the estimates came out and the last 15-20 sessions, has something changed which could have an impact on how the markets view the earnings delivery?
In the last month or so, not much has changed, frankly, and the view continues to remain that the private sector corporate-facing banks should probably see the worst of the NPA, etc., in this quarter or the next, and probably get back to good growth trajectory from the next couple of quarters onwards. The retail banks, again, the well-run banks are growing well on the retail side. So I think it's a okay picture for the banks in the private sector. And if you look at the broad Nifty earnings growth expectations for FY 19-20, almost half or even a bit more comes from the banking. So that's one segment that's very important, but no major negative surprises expected so far.
Do you feel that the liquidity is on its way to mending? You've got the RBI constantly trying to maintain sufficient liquidity to various routes, to currency swaps. You've got OMOs. Now they've announced yet another one. Do you think that's enough?
So for the banks, liquidity is fine, and though deposit growth rate is still below what one would like it to be, it's still not a bad situation for banks. It's the NBFCs, and that also the NBFCs where the market perception is still that of a risky nature. Those are still facing issues, and we haven't seen resolution of that. So the private sector banks are doing okay. The public sector banks are doing okay. Within the NBFCs, the haves which are perceived to be safer are getting as much money as they need. But the places where the NBFCs are perceived to be risky and lending to the riskier segments are still not getting enough liquidity.
There was a bit of a dichotomy, Mihir, ahead of the earnings season. The other bit that was very, very widespread was the recovery in cement. Now, while ACC might have disappointed, I'm not asking you to comment on specific stocks, but just how you and your team would have viewed this and what's your belief there. While ACC might have looked like disappointing, Ultratech came out with fairly decent delivery and very strong commentary in their outlook, talking about how the industry's turned around and showing double digit for the first time in multiple years, etc. What's your stance on this space?
So we are seeing some kind of discipline on pricing, and as you have been noticing, in the last couple of months, we have seen 30 to 50 rupees jump in prices, mostly all over India. So there seems to be some production discipline which has come in, and it's been aided by good demand. My guess is that a lot of the demand is coming from the government-linked housing schemes. That seems to be the biggest driver, because as far as the private residential construction in the urban segment is concerned, we are not seeing that much traction.
Okay. Fair call. Mihir, Vora, we'll leave it at that. Thank you so much for taking the time out and being with us today. Appreciate your time.
Thank you. Always a pleasure.
All right. Need to take a very, very quick break. Back from the break, talk about a bunch of earnings conversations lined up in just moments from now. Stay tuned to Bloomberg Live.